Good morning to all of you. I've been away for a few days and I noticed that there's been some excitement over the last few days. So I thought we'll put things in perspective. You will recall that on the 6th of August, shortly after I took over, I said that a number of measures have to be taken in order to revive the growth in the economy. Top of the list was fiscal consolidation. The second was moderating inflation over a period of time. The third was reviving investments. There were a number of other ideas that I had shared with you. I also said that there's enormous goodwill for India, and there are a lot of people who continue to keep faith in the India growth story. Now, after about 9 months, there is acknowledgement that the steps that we have taken have delivered the desired outcomes in each one of these heads, especially on fiscal consolidation and moderating inflation. I would draw your attention to Fitch's statement yesterday, where they said, and I quote, "The authorities were successful in containing the upward pressure on the central government budget deficit in the face of a weaker than expected economy." Fitch expects the government to broadly meet its FY 2013-14 budget deficit target of 4.8% of GDP and to gradually reduce the high level of public debt over the medium term. The authorities have also begun to address structural factors that have weakened the investment climate and growth prospects, notably regulatory uncertainty, delays in government approvals of investment projects, and supply bottlenecks, for example, in the power and mining sectors. The establishment of a Cabinet Committee on Investment should help to fast-track infrastructure-related projects, and government has made it easier for foreign direct investment to access a range of industries. Nonetheless, the investment climate could benefit from further reforms, such as the new land acquisition bill, some liberalization of insurance and pension provision and public procurement, which are pending parliamentary approval. Addressing the structural issues in the power and mining sectors would further boost investor confidence. Inflation pressures have begun to show more pronounced signs of easing in response to weaker economic conditions and the tightening of monetary conditions by the Reserve Bank of India. Despite a deterioration in the current account deficit, in part due to an increase in gold imports, Fitch considers India's overall external position to be a relative rating strength. Foreign debt is moderate, and RBI's international reserves, which stood at US $288 billion at the end of May, provide a cushion to absorb adverse external shocks. The main factors that individually or collectively could trigger positive rating action: 1, sustained fiscal consolidation or fiscal reforms, which lead to a sharp decline in the GGGD to GDP ratio. An acceleration in economic reforms that leads to a material improvement in potential growth rate consistent with stable consumer price inflation and external balance. When I've read only parts of the Fitch statement, the point I'm making is that reviving the economy restarting the growth engine, reviving investor sentiment is not only part of the deliberative process of decision-making and implementation, it is painstaking, might appear slow, but if we do not take our eyes off the ball, it will yield results. And the steps that we have taken in the last 9 months have yielded results, which is why the world continues to repose faith in India. It's not a ODI match. If you're watching an ODI match, as I do, you expect either a wicket to fall at every ball or the batsman to score a sixer at every ball. But that's not the way economic reforms can take place. So while I envy the instant experts who can make instant pronouncements, my appeal to everyone is we have to take a long-term view of what's happening in India and what will be the results that we will achieve over a period of time. I think significant results have been achieved in the last 9 months, and I'm looking forward to more reforms to implement the broad policy statement that I made on the 6th of August and to achieve the desired outcomes. I couldn't agree with Fitch more when they say that more reforms are necessary. There are a number of decisions that I expect to be taken in the next few days and few weeks. I think that the following issues will be resolved before the end of June. Firstly, on coal pricing and coal allocation to power plants. Secondly, gas pricing. Thirdly, on FDI limits. Fourth, on a number of steps that SEBI is contemplating based on the Chandrasekhar Committee report that was submitted yesterday, and to consider which SEBI has called a meeting of the board on the 25th of June. On skill development, the Skill Development Mission and the National Skill Development Agency are fully operational. The Prime Minister constituted yesterday a Cabinet Committee on Skill Development, and we hope that the initiatives that are announced in the budget and the related measures will be announced, say, by the middle of August. So we would still have about 7 months to achieve the targets that we have set for the current year.